The reason why you lose all of your trades is because you trade like a machine gun. Instead, you have to trade like a sniper. Imagine a sniper. They wait patiently for that perfect setup, and when they take the trade, they make so much money because their winners are huge in terms of risk-reward ratio, all right? And that's how we make money. And in this video, I'm gonna tell you exactly how I find my sniper entries in the markets to make consistent profits. This sniper entry strategy is easy to use, super beginner friendly, and also it doesn't require a bias, so even a 5-year-old could understand it and use it to make a lot of money every single day. So with that being said, enough talking, let's get into the video. Alright, so what is a sniper entry? A sniper entry is a highly precise entry in the markets that we use liquidity to take that perfect high risk-reward ratio trade setup, okay? With a high risk-reward ratio setup, we can risk very low amounts of money to make a lot of money. Imagine that. That's perfect for beginners and also experts, because imagine the best traders in the world, they take few trades, but when they take a trade, they are monsters, killers, because they are so huge. And the way we can take these trades is taking advantage of liquidity. Liquidity is essentially liquid cash in these markets that big banks, institutions, and hedge funds want to take, because once they sweep liquidity, they can fill their massive orders. Above and below liquidity, there's a lot of retail trader stop losses that will get filled at some point. That's why 97% of the retail traders lose money in the markets, because they become liquidity. We don't want to become liquidity. We can spot these liquidity areas in these markets by spotting highs and lows. I'm going to teach you very soon how can you spot it in the markets. And obviously what also makes a sniper entry is the big risk-reward ratio, your risk versus profit. When you take a sniper entry, you can risk $100 to make $3,000. Okay, so in order us to take a sniper entry, we have to spot liquidity. Where is liquidity? Liquidity rests above highs and below lows in higher time frames. So I would choose a 1 hour time frame or 4 hour time frame or daily time frame. Normally I would say 15-minute time frame and up, but when we want to catch that huge sniper entry, that's when we need to find the liquidity, the highs and lows in very high time frame. Let me show you an example that happened recently, a huge liquidity sweep that caused a massive market structure shift. So we literally went from a downtrend in the monthly time frame. Look at this. This is a monthly time frame liquidity sweep. As you can see, in the monthly time frame, we took a massive liquidity sweep that caused this market to go up instantly. Is this a coincidence? No. This is just how these markets operate. This was a liquidity sweep, 2 liquidity sweeps that caused the price to go up. Now, this move down was actually from tariffs news, but we have to understand, it actually went down for the big banks to fill their orders, and then they were just, okay, let's cancel the news, and now it went up. This is all a big game, guys. We have to understand. It's business. It's how the world operates. Takes liquidity and then switches the trend direction. Here, right here, okay? Now, how can you spot the liquidity? Above highs and below lows. How can you spot the highs and lows? Well, a high is being created by 2 candles that are together. This right here is our high. Now, we have to find them in the higher time frame, obviously. I would say 1 hour time frame, 4 hour time frame, daily time frame, all that good stuff. Even monthly time frame, weekly time frame. But this is a high. It takes 2 candles to form. First candle has to be an up candle, as you see right here, and the second candle has to be a down candle, as you see right here. Now, as you can see, this is our liquidity, buy side liquidity, and when an uptrend goes up like this, when it sweeps it in the higher time frame, it will most likely go down after that, because the big banks are happy. But obviously, very soon I'm going to show you how to actually enter using this. But first, I have to tell you a low, how to spot a low. A low takes also 2 candles to form. Now look at this. This right here is a low. A low is sell side liquidity. It always appears by creating 2 candles. A down candle followed by an up candle immediately, okay? Below there will be low, okay? Liquidity, resting liquidity in the higher time frame that these big banks want to take. Now, what most of the time happens is when the price is in a downtrend, low lows, low highs, low lows, low highs, low lows. When there's a liquidity sweep, the price will most likely, usually if it's a higher time frame liquidity, it will then go to the upside. As we saw in the monthly time frame, there was a huge liquidity sweep, and the dump was caused from the tariffs news. And once the liquidity got swept, it just went to the upside, okay? Billions and trillions of dollars were made that night, made by these hedge funds, institutions, all these freaking market movers. They made a bunch of money doing that. And also, I made money from that move as well, because I I saw that. I saw the liquidity sweep. I was prepared and I took the trade. I think I have it in my YouTube channel, but regardless, you saw that. But now I'm going to show you how to actually spot them in the markets, and then I'm going to show you how to see a market structure shift to actually make money. So regardless, let's actually go into the markets. Let's start from lows, okay? A low takes 2 candles to form, just like a high, but it's first of all, it starts with a down candle followed by an up candle. This right here is a low right here, down candle right here, followed by an up candle. Look at this. Let's look closely. Let's look closely. Look at this. Down candle followed by an up candle. You're gonna choose the more prominent wick as the low because it takes 2 candles. So even if it's a up candle, you're gonna choose that if it's lower than the actual down candle because it takes 2 candles, remember. And also, look at this. This is also a low right here. If you look closely, this is a down candle followed immediately by an up candle. So right there, there's a liquidity, and as you can see, this is also a low, this is also a low, and as you can see, this is liquidity, this is liquidity. What exactly happened here? This got swept, this got swept. What happened afterwards? The price went up. Is it a coincidence? No, not at all, because that's how these markets operate. Now what happened here? This is a down candle followed by an up candle. We're gonna put the low below here. What happened? Swept liquidity, went up afterwards, a little bit at least. And this is also a down candle followed by an up candle. There's a low, and also this is a low. All right, kind of messy chart right now, but still makes total sense if you look closely. Now, what we have to also understand that there's also highs, okay? The way you spot highs is very simple. This is an up candle followed by down candle. Remember, a high and a low takes 2 candles, so this is the high because it's an up candle followed by down candle. 2 candle sequence, all right? There's a high, and also, if you look closely, this is an up candle followed by down candle. That's a high. And if you look even closer, an up candle followed by down candle. That's a high. There's liquidity, so there's resting orders that these big banks want to take. A bunch of retail trader stop losses, a bunch of orders. And once these get swept, there's a huge chance that the price may switch its direction to the downside like this. So if we go in an uptrend like this, sweeps the liquidity, it can turn into a downtrend afterwards. But obviously, after we see a liquidity sweep, we have to see something called a market structure shift. So, like I told you, after we get a liquidity sweep, we need to see something called a market structure shift. A market structure shift is literally the confirmation, a verification that the market will then switch its direction completely. So it can go from an uptrend, and then we got the liquidity sweep, then it will turn into a downtrend if we see the actual market structure shift. Vice versa, from a downtrend, liquidity sweep, it goes to an uptrend, okay? Now, let me show you in the charts, how can you spot the actual market structure shift. So check this out. Let's say this is a 1 hour time frame low that has a bunch of sell side liquidity. Once it actually got swept, what we're going to do is we're gonna scale down to the 1 minute time frame. We need to see the market structure shift. The way that the market structure shift happens is by seeing 2 breakout structures in the 1 minute time frame, okay, after the liquidity sweep. So let's say this is now a breakout structure. Why? Why is it a breakout structure? Because this is the most recent low, low, lower high. It's essentially a high. Essentially, this is an up candle followed by a down candle in the 1 minute time frame. May sound a little bit like rocket science, but it's super easy. Look at this. Up candle followed by down candle. This is a 1 minute high, and that's a BOS, breakout structure number 1, because an up candle body, the fat part of the candle, closes above it in the 1 minute time frame, okay? 1 minute high, 1 minute breakout structure. We need to see 2 of them to see the trend confirmation switch, the actual market structure shift. So this is a higher high now, this is a higher high, higher low, higher high, all right? That's how you see the market structure shift. This is a breakout structure number 2, remember, in the 1 minute time frame. BOS number 2, and this is going to be our entry to the actual upside. Like this, we will buy right here, boom. And what we're gonna do, we're gonna get like a huge sniper entry setup, maybe 1 to 15, at least 1 to 5 reshort ratio. So it's gonna be like this, from an uptrend to a downtrend market structure shift. We have to see that higher time frame liquidity sweep, right? And then afterwards, we have to go to the 1 minute time frame. Now remember, this liquidity can be 1 hour time frame, 4 hour time frame, daily time frame, whatever, hard time frame, okay? Then what you're gonna do, you're gonna go into the 1 minute time frame. It's very important. Once you see that sweep of liquidity, what you need to see is 2 breakout structures. What you have to do is keep an eye on the most recent low in the 1 minute time frame. What is a low? down candle followed by an up candle. Very easy. You have to see the most recent low. When you see that breakout structure, a down candle body closing below the most recent low, that's a breakout structure number one. Okay, BOS number one, breakout structure number one. And after that, we need to see second one. This is a now low low, low high, low low. All right. Then after that, that's a breakout structure number two. Then when you have two breakout structures, then you can enter right here on the money. And what you're gonna target as your take profit is more higher time frame liquidity, so lows. Okay, you're gonna get that nice reshort ratio, and boom, boom, easy as that. And where do you put your stop loss? Always above the most recent low high. So this right here in the 1 minute time frame, obviously low lows, low highs, and you're gonna target higher time frame liquidity, because liquidity can then switch the trend from a downtrend to an uptrend. Okay. All right, and now it is actually time for me to backtest this strategy. I'm gonna literally show you step by step how can you take this trade in the actual market. So let's go. As you can see right here, what we're dealing with is a 1 hour time frame low, down candle followed by an up candle, sweep of liquidity, also immediate reaction. What we're gonna do now is go to the 1 minute time frame. This is the 1 hour time frame low right here, and then we swept the liquidity right here. I'm in the 1 minute time frame. So what we have to start scouting is the most recent highs in the 1 minute time frame. So this is a up candle followed by down candle. This is our most recent high. We need to see the breakout structure. But if we create new highs, that's gonna be the most recent one, obviously. So let's see, do we create more? All right, we create a new high. As you can see, this is our up candle followed by down candle. We need to see that breakout structure. Okay, we actually create new high. Why? Because this is an up candle followed by down candle. Remember, when you want to see that breakout structure, you need to see the most recent high, okay? So let's see. All right, we break structure number one. This is a high. This is an up candle body closing above that. Closing, the body, the fat part of the candle closes above that. That's a BOS breakout structure number one. All right, it's gonna be right there. And then we need to see a new high. So as you can see, this is the high number two. All right, as you can see, if we look closely, we created a new high. Up candle followed by down candle. Remember, the most recent high always matters when we'll want to see that breakout structure. So we actually now broke structure number two. Why did it break structure? Look closely. Let's look closely. This is a high right here, up candle followed by down candle. Body of the green candle, body of the bullish candle closes above that. So what do we do now? I'm going to put my long position right here above this up candle where it broke structure. Put the stop loss below the most recent higher low, higher highs, higher lows. And I'm going to target some higher time frame liquidity. So let's go right here. I'm going to target this high right here. Boom. Okay, let's see what happens. So this would be the trade. Now let's take this. Obviously, this is just an example. Obviously, remember that these sniper entries, they may take hours and hours. So be ready to wait some time and then you can make some money. So let's see what happens. All right, look at this, guys. Look how long it's taking. All right, and then we actually finally tap into the, all right, barely. Look how long it's actually taking. This would have been almost a day now, and there we go. Then we finally hit the take profit. As you see, it is taking for some time, but you have to be ready that the trade could take potentially days. But that's why it's a sniper entry. But also it could be like a swing trade. But now I have to show you to the downside as well. Okay, as you can see, this is a 4-hour time frame high. So this means that we were in an uptrend, we're moving higher highs, higher lows, higher highs, higher lows, higher highs, etc. The banks, the big banks, moved the price to this level. We got the sweep of liquidity. Every time that there's a huge liquidity sweep, I would then go to the 1 minute time frame. Now I'm currently in the 1 minute time frame. So what I need to see in the 1 minute time frame is the two breakout structures to the downside. So we need to spot the lows. Okay. So do we create them? All right. As you can see, we create our first low right here. This is a down candle followed by an up candle. So that's our first low, but we don't see a breakout structure yet. Now we saw our breakout structure number one, BOS number one. Now keep this in mind, this breakout structure has to happen very close to each other. I mean that first breakout structure and the second breakout structure, because it's a trend, right? Second breakout structure, I would enter right here and I would put the stop loss above the most recent lower high. Remember, low lows, low highs, right there. And I would target some liquidity as my take profit. So, okay, and for my take profit, I would target some higher time frame liquidity. So I know this would be a huge liquidity in the higher time frame. So this would be like a 1.4 restore ratio. I would then take this, not the craziest risk ratio, but it's still there. Okay, so let's see what happens. As you can see, they may take some time, okay? Okay, there we go. So, as you can see, not the craziest R multiple trade, but still, we have to target liquidity because liquidity could potentially switch the trend direction. But still, it's a pretty cool sniper entry. We literally went from an uptrend to a downtrend. That's a very nice, precise sniper entry. And we can use that by seeing the liquidity sweep plus a market structure shift, all right? And that's cool. I really hope that this video helped you. Make sure to comment down below if you found this video helpful. Like, subscribe, share this video to a friend who you want to see succeed. And also, if you want my full guidance, one-on-one coaching, group coaching, live trading, all that good stuff, then make sure to click the first link in the description. It will take you to my mentorship. It's very limited, but obviously, if you think you're serious, then make sure to apply for that. And yeah, man, as usual, I'll see you on the other side. Peace out.